And gentlemen, we're going to try this one more time here. Let's hope that I stay in that little green bar. I have no idea why the internet's not working. Yeah, it's been fine for a while. But we hope you're enjoying a Merry Christmas. And no matter where you are in the world right now, we believe it is December 25th. We just had the solstice the other day. We're going to have a New Year's here soon. So it's exciting times. We hope you're spending it with your family, getting ready for the new year. We believe that it's going to be a very, very interesting and well-rounded year, something to keep your eyes on. Now, everybody is obviously interested in the crash of the US dollar. It's been one of the long time coming stories. I did an update video on this yesterday, but it got deleted because of the bad internet, essentially. So that made it a lot more difficult. Trying to solve that issue now, so hopefully it has been solved. Otherwise, I'm going to have to just skip it and maybe try to do it with my phone and do some not very great versions of the charting. I'm not sure if it's going to show up well or not. So if it is showing up well, give us those thumbs up. Let us know that the content is streaming effectively. Again, I have no idea why we ran into problems with the internet here in this last little bit, but something is obviously going wrong in the world. And that's to be seen. So, for instance, this morning when we went live, we were looking at the S&P 500. The current dip that it took actually brings us right down to the exponential 200-day moving average. I do suspect, because it's been such a sharp drop over the last week, we will likely see a B wave for that. So if we dive in, let's see if this stream is actually even working. Yeah, it says a yellow live stream health. Ugh, what is wrong with this, eh? I have no idea what happened. Nothing's changed, but nothing's working here in Malaysia anymore. Well, ladies and gentlemen, I might not be able to do this on the computer, which is a little bit of a downside because the computer has all the charts. So if this live stream isn't really or effectively, doesn't make much sense to keep running it. Yeah, and as you can see here, it's blinking in and out of green and yellow for no particular reason whatsoever. The internet says it's extremely fast. I do run scans on my computer, but here we go. The S&P 500, this is the first part of the stock market crash, which we have been actually watching since early October. So it's nothing new. All we see is a very sharp downtrend as soon as we broke this lateral line here at around 260 for the S&P 500. Again, the sentiments, once it broke there, was very noticeable. Let's take a look. Okay, good. It says we're live. Yeah, I just don't even know what's going wrong with the internet, ladies and gentlemen, so I apologize for that. You'd think it would be a lot better. It's supposed, I mean, here, look, if I check it on my phone, we can see that we're getting fairly fast speeds, so it doesn't make a whole lot of sense. But let's scroll out to the 1 day. Yeah, on the 1 day, this is a very, very sharp candle drop. Say at 47 megabits per second up and down, yet the stream is lagging. I have no clue what's going on or why that is. Anyways, I'm going to roll through this anyways and hope that things just go smoothly, even though I guess it might not always go in my favor. I think a lot of it is leading me back towards the jungle is really what it comes down to. So if we look at the S&P 500 on the monthly chart here, you can see that we have actually wicked down to the exponential moving average, which we have here, this nice yellow line. I do suspect we're going to have a dead cat bounce on this yellow line. There's just too many things in play to not have a bounce, although it's not going to go very high. I wouldn't put it past the $250 mark or the 250 point mark on the S&P 500. So it won't be a very big ABC retracement. And I do suspect this will be an ABC downwards, at least all the way to multi-year lows. Let's see, actually this C and E should probably be a little lower here. I do suspect something like this over the course of the next few months. If you actually take a look at both the 2001 and the 2008 crashes, we'll remove this bar because we didn't break out of this. This is likely our first point that we come down to test around 150. Now I have this could take a little while. So this drop here, this straight down notion, this happened very sharply and very quickly, and there's a few reasons for it. So here all we had was a single drop down before we started to climb up again. So part of the question becomes now, do the Federal Reserve people start instigating a new form of quantitative easing? Now, in the other day's show, went over the world monetary changes like Bretton Woods and gold standard. I had this up the other day, so we'll take a look over it again. Yeah, it's too bad that the stream wasn't going good. I have no idea why that happens. A little depressing, actually. Anyways, hopefully things start to go a little smoother with my internet. No matter where I go in the world, I always seem to have troubles with the internet. No idea what that is. Okay, so here we go. Here's a nice little PDF about the gold standard and the Bretton Woods regime. We went over this yesterday. The monetary changes that are enacted during these what I'll call climactic shifts of the monetary world are usually happen quite quickly. So which international monetary regime is the best in the economic performance? Obviously none of them are. Fiat money printing is a horrible thing. We saw the degradation of the gold standard take multiple years, and Bretton Woods, once it was enacted, only took a few days. The fix of quantitative easing in 2008 only took them a few days to basically re-establish the money printing system. So if we take a look at quantitative easing now, easing charts, we can see that the stock market's pretty much moved in parallel with the quantitative easing printing bubbles. Let's see. Yeah, so you had the ECB printing money, you had the Bank of England printing money as well. Do we have another corollary response? Yeah, okay, here. So here's the months from 2013 up until 2015, and you can see that the quantitative easing line pretty much kept the markets up. So as soon as they stopped printing money and raised interest rates, what you see is this sharp drop. And this sharp drop is natural because there was nothing keeping our markets up from 2008. The only reason we had any markets in the last 10 years was because they were printing money. So now the question becomes, does the dove of the Fed whitetail itself and become another monetary printing source to save the markets? It's what they did last time. It wouldn't give them too much, but it would definitely give them the breath of air to get them back to previous mounted highs somewhere around the 260. So a big question on my mind is, do they turn the printing press back on? Now, I do know that the signaling of the Federal Reserve to raise interest rates over the last, 6 years pretty much, they've consistently said that they would do it, and it's something that they have started to do. It will bring strength to the dollar, but likely for a very short period of time. So the big question, I think, on everyone's mind is not when the stock markets crash, because I don't believe a lot of money will overflow into the crypto space. Again, you have to remember how very few people know about this stuff, let alone are willing to invest in it during times like this. Now, between the years of 2016, it's more likely that you would have had people investing in crypto from the institutional space. Now, I know that doesn't sound like what we would have heard in the past, but there's a lot of big money that moved into this space when they had flush pockets. If they're going into a survival mode, it seems unlikely. I do suspect that Bitcoin is going to go lower because of that. Now, if we actually look at Bitcoin right now, we do see a positive divergence on the 15-minute chart, which is quite a nice thing to see, because it means we'll likely have a short bump up, but even then we've actually just broke down a little bit. Let's see if we're testing so we've got multiple test points on Bitcoin right now, and we are just breaking down below it here. So that's not necessarily a good sign, but we have found this base of support here, and we can actually draw it all the way through to the last high of wave 3. Here we have a lot of volume profile support in this area too. So if we break here, we're going down to 3,500, and then we're going to test it. But see how the RSI at the bottom here has been going up while Bitcoin is going down? That's actually a bullish signal. So we may see a quick run up to around 3850. But again, what we see has happened here is we are now forming a breakdown essentially in the market. So if you were to imagine, and I'm not going to say that this is a head and shoulders because it doesn't look pronounced enough to me in any way, shape, or form. This bullish signal doesn't bring us too much higher, and if that's the case, it'll be one of the last times we test 3,900. Now, a few weeks ago, or about 2 weeks ago, I made a case for why Bitcoin could go to the $5,200 area from where we're sitting now. So if we scroll out to the 1 hour, we imagine that this is the ABC corrective wave from where we were sitting. You would get something like this. I do suspect this because it's a complicated market. You'll see an A, B, C, D, E. I thought B would bring us up to around the $30 or $5,300 area, with bringing again lower lows on the C around 2,500 to 2,800, an E to retest around the $4,600 area before finally coming down to the. This is John in Bitcoin in the earlier days either, so we are in totally uncharted territory. One of the things that was sent to me the other day that I did really like, though, let's see if I still have this saved in my screenshot area. Let's take a look here. I may not have it. Okay. Oh, that's too bad. I had a really nice screenshot of the .com crash. Ah, here it is. Beautiful. Okay, so this is Microsoft's crash. One of the ladies and gentlemen in the Telegram channel had sent this over to us, and I quite like its feeling here, essentially. So if you take a look, this was Microsoft in the early .com bubble between 2001 and 2003. So this is essentially, we could have a retest of the $6,000 area, which would be great, before coming back down even lower. Now, the difficult part here is this was already after a global economic recession. So this was the high of 2001 up here, and this was the breakdown around 2011. So the only difference that we have with Bitcoin in this area is that we are now in a global economic recession, which is not a good sign for anybody. Now, we're likely excited as people that have been invested in the Bitcoin space for a while, knowing that these are some of the indicators that bring us more value to our space, but it's getting harder and harder to say that that might be the case. It's just a very difficult sentiment to imagine businesses going well, that can't pay their debts, that start to lay off employees, and employees can't pay for their cars or their houses or their family. It's going to be a lot of economic turmoil. So even though it's kind of exciting to see something that we'd been anticipating for many years start to come to fruition, it's kind of a devastating moment. So a big question on my mind here is, do we see the Elliott wave impulse pattern of the 1, the 2, 3, 4, and then a 5 to make this B wave, something like this? Or do we just break down here? If we break down here, we're going to go down fast and hard. I suspect we'd probably cut right through the $2,500 area, and that could be really good for Bitcoin. I was actually listening to the ICE podcast the other day, and I skipped right into the middle, and the first thing that I heard them say was, yeah, Bitcoin could go to $1,000, and a lot of institutional money is going to be waiting to get in down at that point. So if they are suspecting that, and these are the guys that are trying to run Backed, and by the way, as far as I know, Backed has been delayed. The economic channels for the big boys to enter aren't necessarily even there, which could cause in itself a price run. So it's a really interesting, we have a really interesting next few months on our hands. We will likely know by the mid of January where we're headed. Again, I do suspect that if we do bounce up to even higher, maybe to test the $6,100 area, you're going to have a lot of people that are going to be in FOMO and bull market hype. Again, you just have too many negative sentiments in the global markets for me to think that this is going to be the breakout time for Bitcoin. It just doesn't make sense. Like from an emotional standpoint, it doesn't make a lot of sense. Although you could see this retracement up to the $66,000 area, I do suspect we would come tumbling back down quite quickly. Anyways, just a quick little update. Figured I'd let everyone know what my quick thoughts were about all this nonsense. It's going to be really It's going to be a really interesting time. Remember, get ready to pivot quickly, to act in what's the best interest of your family. That's how most of these traders are going to be playing this game. So keep a close eye on everything. Again, you see some of the breakdown signals in that of Bcash too. Bcash broke off of its highs. It's coming down to testing its lower areas of support as well. So if the rest of the market is in the red, are we seeing a simple retracement from the top of those highs? As you see here in EOS as well, we found support right near that or that double bottom that we had before. Again, this does not look very bullish to me. So it's hard to say. We're gonna have to keep our eyes on it. We're just about to dip into the oversold on the 1 hour. So if we break below this on the 1 hour in EOS, we'll likely come down. But again, it's just a market you want to keep close eyes on. I have no particular sentiment in the direction that these are going to go right now, simply because we've never had such an overarching catastrophe in place. And also, when you look back in the past, all these governments have always come out with some type of monetary corrective inflation or quantitative easing or new monetary policy that kind of fixes and subjugates the problem quite easily. So this is one of the things that we were chatting about with Tyler Jenks, is what do the governments choose to do and how do they enact it in policy? It makes a big difference. They could decide to step in and just start printing a lot more money, and that would keep us up for another little bit. But how long? Who knows? Maybe another year. We don't know how much further the money printing can go. But as soon as they started to raise interest rates and stopped the quantitative easing, we do see the corollary effects in the market as well, which is just a downward trend in absolutely everything. Now the big question again here is what happens to the US dollar. I do suspect we would see other emerging market currencies collapse first. So even though you have the DXY on a multi-year pattern here, I was looking at this one the other day, this downward triangle since the early 1960s is a 40-year trend line here. If we don't break out of this triangle right around here, which would put us into October of January 2019, October 2019, and the US dollar starts to fall as well, this is going to be the really interesting point, is does the US dollar create a new all-time low in its index? That's really the corollary response for Bitcoin, and that we would see closer probably to the mid of December 2021, 2020, something like this. So this is not as often as I think it's a chaotic like tomorrow experience. It seems like it's going to be a long, drawn-out process that involves a lot of monetary policy and BS coming from the governments and politicians. So something to keep your eyes on, ladies and gentlemen. Steve with the Arcane Bear. We hope you're having a fantastic Christmas with your family. Give us a thumbs up if you like this content. I'm going to jump offline for the rest of the evening because it does get late here. I'm going to be headed to Sri Lanka, like I said, tomorrow. So hopefully I can find good internet. If not, I'm just going to do a few vlogs. I'm visiting my friends for their wedding. I'm probably going to take some time off myself. But this is just a market that I'm keeping a close eye on. I do still suspect that the negative sentiments are going to drag us downwards, and I think it's going to do it to every market. What people need to remember is that the value of something is perceptional only. It's a privilege. If you're in the mode of survival, you do not care about the value of Bitcoin. You care about, do you have water and food? And if we put the world in an economic collapse, it's going to make a very different sound than we thought it might. Anyways, Steve with the Arcane Bear. We hope you have yourselves a wonderful evening. We're going to sign off for the rest of our night here, and we'll see you guys on the other side.